Welcome to ATI Pro Media. Thanks for joining us today. We're live at 9 every day, bringing you today's news, talking about what's going on in your markets, trying to make sense of all the nonsense out there or something like that. I don't know. But markets giving a little bit back on the grain side of things, mixed. The cattle bouncing back a little. I don't know if it's just a turnaround Tuesday, weird Wednesday. It's Wednesday, but we're jockeying around here. So anyway, let's dive into your markets. I'm going to talk. We'll quote things up. Let's go out to the pasture here. Got a new shot for you. Had a baby calf born last night. Decided Mama was taking a good care of it, and came out to find a healthy, happy calf here this morning. So good. We'll walk through the pasture. I'll quote up your markets here real quick, and then we'll bring Connor B in. All right, March corn's down a penny and a half, 4.93. Beans are down 11 3/4 cents at 10.63 on the March contract. Oil's down 89 points. Soy meal down $1.90. Chicago wheat is the lone star on the grain side of things, up 2.5 cents at 5.79. KC wheat, March KC wheat, $6 even, up 5.5 cents. Looking over your July contract, 6.18. We'll talk about that chart here in a little bit. Feeder cattle up $1.20, live cattle up $1.80, $2.80 on the April. On your hog market, we got April hogs up $1.42. Crude oil down 60 points. Diesel down a penny to 2 cents, 1 to 2 cents. Nat gas is relatively unchanged. Looking over your equity markets, the Dow is down 120, the S&P down 17, and the NASDAQ down 99. Check in on Bitcoin real quick. 98,000, down 310 points. Lost that $100 handle. All right, let's bring Connor B in. Connor, how's it going today?
Hey, not too bad. Markets are down. We could point to, it's a little bit more friendly in South America, what have you. But guess what? You know it better than anyone. Bulls need fed every day, right? We need the headlines, and we need to keep them coming. So with that,
True.
we do have a good flash sale. Tariffs be damned. We got 330,000 metric ton of corn sold to Mexico. So good to see, right? It's
fantastic. Keep them coming. Good to see you off all the fresh tariff news. Sale to Mexico. I love it.
Heck yeah, let's keep it going. It'd be nice, man. How great would it be to see a China flash sale come in there, right? We didn't talk soybean inspections. We haven't talked about them this week, but again, it'd be nice to see that one last little push, right? To see a little bit more go out the door before the business really shifts to down south. But I don't know. We'll see.
And especially with the harvest delay type stuff, the slower harvest pace down there, that we might might be positioned to see a late last minute type sale. So yeah, good stuff. Love to see it. Keep your eyes peeled. Keep your eyes open. It's the 5th day of February. We got a few more days here this month, and we'll see how it all shakes out.
Yeah, here we go. Well, where are we going to next, right? Should we check in on crop insurance real quick? That was what's on my mind.
Let's do that. Crop insurance, a little look at market volatility. I want to look at a wheat chart, talk about that, but let's talk about crop insurance first, Connor B.
Yeah, so here we go. We are 5 days into crop insurance pricing. Right now, December corn, $4.67. November soybeans at $10.63. Last year, Brady, $4.66 on corn. $11.55 on soybeans. Big difference from last year on the soybean market. It's kind of amazing to see that we're in the same level as we were last year, right? Except last year we started here in January and did this. This year we started and went here, right? So a little bit different feeling of how we get into that 465, 466. But if it was the end of the month right now, it'd be the same crop insurance levels we were dealing with last year. Last year.
Definitely. Well, it reminds me of marketing when you talk about going up versus going down. And it always reminds me that, it's a heck of a lot easier to sell like $6 wheat or $5 corn when you're going up, but coming down on that, if you're coming off of $7 wheat, selling $6 wheat isn't very exciting or as exciting. But yeah, definitely. Different story, different tune, different year, Connor B.
And the big thing, the big chatter that I'm hearing, I'm not a crop insurance agent, but the enhanced covered option, right? We really changed the subsidy levels there to where last year it was a 44% subsidy. This year it's 65%. So a big jump and one if you're looking at increasing that crop insurance level, that ECO coverage sure makes a lot of sense with that higher subsidy level. So it feels like a gift, right? If we want to be individual coverage 80, 85, we can get up to that 95%. That's the ECO's area coverage, but it's a good way to extend it if that works. So talk to your crop insurance agent.
Yeah, some interesting tools out there. You got to make sure you know what you got there, how it settles, how it works, when it pays, all those pieces of the puzzle of what you really got covered, but enhancing your coverage level. Some good tools out there, especially if you can take advantage of a subsidized product out there. But that doesn't necessarily mean that you need to ignore other tools that are out there too. To manage volatility in the markets, because you establish that coverage, you get it protected, and then those markets move and things change, and there's opportunity to either protect maybe a possible indemnity because you got a good insurance product out there and the market sold off, or B, ratchet up that floor price because the market changed since you bought that coverage. And how do we go out and protect more dollars as the floor price improves, I guess, or the markets improve? So
absolutely right.
Dynamic out there.
And that, the thing with crop insurance is that it's going to change based on what your yield is, right? It's yield times price times your coverage level is what is going to be your guarantee. So if you have some really good yields and that price drops, right, the scale tips. And so that's why make sure we're using crop insurance. It's a fantastic tool. It's a great piece of the marketing plan. But if it's your only marketing plan, it's probably fallen a little short, right? Because it covers us for February. It doesn't cover us for any volatility that's going to be coming, in the summer months through that.
Oh yeah.
And then as always, right, we didn't need the safety net this year because we had a nice old crop rally. And maybe we just do that every year. Let's rally after harvest and we can solve a lot of problems. But 2024, when that safety net was taken off October 31st, the market was not friendly. We did the exact opposite of what we're seeing this year. So yeah, always keep in mind crop insurance.
Yeah. Sometimes that rally doesn't always align with the time you need to make those cash sales, and you need the cash and free up the cash. But so yeah, keep all that stuff in mind. But markets move, things change. And speaking of volatility, I want to talk about that. Got a graphic here looking at the C-Vol history. It's corn volatility history posted by the CME. You can see there on the right, we're just a tick above 20. Seen a nice climb from the fall where volatility has increased a little bit here with over the last few months as prices have climbed up and risen off of the lows. But we're a far stretch away from where the levels we saw in those peaks in 23, 22.
Yeah.
Looking back out, this one goes all the way back to that low bearish type sentiment in 20 when we had 3 billion bushel carry out chatter out there. Volatility can move, Connor B.
Absolutely. And here's the thing is I'm staring at July of 2020 with that low vol. What happened in August, September, and then going forward in 2020 is the low vol went away very quickly, right? Things changed like that. So
Yep. And the reason I bring that up here is because just talking about is are options too cheap right now for the potential volatility that could lie ahead? And one could make the case that the market is underpricing some of the volatility that could lie ahead of where these markets could go and what they could do. Bullish, bearish, you can lean which direction you want from here. But volatility might be very inexpensive compared to when you look at the possibilities that could play out going forward.
Yep. Well said. It kind of surprised me how low it is, right?
Mm-hmm.
But then sometimes I get the blind, I get caught up in the noise as much as anyone else sometimes. I gotta ignore it, push it down. But when we see these big rallies, it's like, holy crap, here's some volatility. But when we look back on historical, right, we've seen a lot more. My gosh. We're getting close. When was, in 21, I can't believe it was 4 years ago is that right? Or was it 23? When did Russia invade Ukraine?
Oh gosh, you're testing me there. It was 22 or 23 in that time frame, I believe. 22 maybe.
I think it was 22. Yeah, so 3 years ago. Okay, all right, that feels a little bit better. But we're getting close to that anniversary. So, yeah. But
yeah, a lot of things to play out going forward. And when I think about it, that volatility, where these options are priced, an inexpensive way to own the bushels against sales. Just avoid the black and white perspective to marketing when you're out there of, hey, we're at 470, corn can't go higher, or it has to go higher. This rug can get yanked out from under you very quickly. And that's, I guess, the bottom line message there. We did some premium stuff on that over the past, looking at corn's range, $2 type of historical range. And I think the 5-year average is right around $2 on D's corn futures, if I'm not mistaken. Have to go fact check that, Connor B. But
no, I think you're right. And that's a bit, when you and I start building marketing plans for customers, that's a big part of what we look at, is making sure we're looking at the historical price volatility. Don't you think? Is that I think it gets lost in the noise that, sometimes when you say, hey, the 10, 15-year average volatility for a calendar year on corn is right around $2 a bushel, people would be, no way.
Right.
So
yeah, you can get lulled to sleep very quickly.
Absolutely.
Of what is a good price, what is a good number, and then all of a sudden the thing goes past where you think is a good price is. You get hit with margin calls, or you sold way too much too cheap, or you have a shortfall in production. Something changes, and that's what makes marketing years turn into bad marketing years. So avoid the black and white. I'm going to pull up a wheat chart, Connor B. Speaking of price action movements here. I blasted this out to customers here this morning. Try to zoom in on it a little bit, but this is looking at July KC wheat here, rallying up. That red line's the 200-day moving average, and we tagged that. We're tickling it right now, Connor B. Can we close above it? Can we push higher? Be great to see. But we've rallied off of this 550 area up to 619, 618 in that area on July KC wheat, new crop wheat. Definitely a level to pay attention to out there. 650 up there. I tagged that on the chart with that line. Worth. If you're going to throw a target out there, I don't know. I like that as a target.
Yeah, definitely. Can you peek at Chicago wheat for me?
Chicago wheat. Oh gosh, that other contract. All right. What month you want? July or?
Oh, yeah, let's look at new crop July.
Okay. All right. Still above the 200 or below the 200-day moving average on Chicago. Interesting.
Yeah.
Yeah. Yeah, that 200-day there, 618 on the July contract, and we're trading right at 603 on July Chicago wheat.
Gotcha. Yeah. Gotta love wheat.
Gotta love it. I'm gonna throw a cattle graphic up there while we got the charts loaded up on the screen here. April feeders bouncing back a little bit off the lows, but did make that's an inside trading day there. Yeah, hasn't broke out of yesterday's trading range quite yet on the April feeder side of things. Looking at April fats. Stronger bounce in the April fats there. Stronger bounce on the daily chart. This is looking at daily chart. So each candlestick is a daily. If you guys are unfamiliar with candlesticks, daily price range there. But cattle market's bouncing back. Been a dynamic couple weeks in the cattle market.
Absolutely. Hey, if we're looking at charts, pull up March corn. We got to look at it. Let's see. We failed that 5. What's the high we hit? 497, I think.
March corn, yes. We hit 498.5 today, overnight, I believe. I think we traded 498.5. So we did take out an overnight high. And the overnight highs are interesting to me, Connor, always. It feel like the day session often wants to go take out that overnight high or the overnight low in most cases. But yeah, it took out that overnight high. Now, it's not a contract high by any means, so that maybe changes the game a little bit. But nice rally. Volatile. I mean, gosh, this trading range here this week already has been dynamic here, 472 to 498. That's a broad range there. So what is that? 16 cents, Connor B. My math. I went to K-State and I'm wearing my K-State purple, but I was a cowboy degree, so my math is just a little dicey sometimes, Connor B. I got to take my Crocs off and use my toes when we get to these bigger numbers.
There you
above
go.
10.
Oh man, good stuff. Good stuff. Well, yeah. Looks like
I don't know what else we got here. We got any questions or comments rolling in?
I don't think so.
No.
Let's go ahead and wrap it up a little bit.
Okay.
Right, we got soybeans pulling back pretty good. Corn looks like it's turning and staying negative for the meantime. But hey, right, if we get something to feed the bulls, who knows what the end of what this afternoon will bring.
It's nice to have a little breather a little bit after a wild week of headlines and noise. Watch out for the nonsense all week here. You never know. Avoid trading headlines. You might be selling newspapers. Connor B, let's get out of here.
Let's do it.
Thanks for joining me today. Thank you guys for joining us every day live at 9. We'll see y'all tomorrow. Have a good day.
See you, everyone.